On the last trading session of Thursday, gold spot printed a closing price little above $1,879 per ounce. The numbers rounded and the market is closed. And on the last week, gold traded as low as $1,855 per ounce and as high as $1,906 per ounce. The numbers are rounded and the market is closed. Gold is trading in a bullet trend. Now we are above the 20 days, the 50 days, and the 200 days daily simple moving averages, and below only the 100 days daily simple moving average. The RSI readings are moderate on the daily chart and the weekly chart and the monthly chart. Basically, no signs of overbought or oversold. Supports are 1855, the low of the last week, then 1838, then 1800, and the resistance levels are 1889, then 1905, then 1940. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week, and from the United States, we are waiting for the following economic headers to be released. The CB Consumer Confidence for month of November due on Tuesday, then the pending home sales for November on Wednesday, and the retail inventories on Wednesday as well. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again. In our last video, we said that gold is a buy if it can close above 1905 level, or it's also a buy on the dip at levels that we have mentioned about 1864, 66, then 1854, 56, then 1838, with target of 1900. The overall assessment for the metals market is still bullish, but we may see some sort of a sell-off in harmony to a sell-off that is expected to take place on the US equities. Now the main media, Bloomberg and the CNBC and other main media stations are flooded with analysts who are expecting a correction in the US equities of about like 8 to 10%, which is going to throw a correction in gold as well, or extend this kind of a consolidation move in the metal markets. Though we have had a nice technical setup in the last week for gold, I mean a bullish setup for gold to rally, but we got no sentiment to support such a move. We got last week a breakthrough on the Brexit negotiations with a deal signed on the table. This Brexit has been always on the headlines with, it was looking like it's the negotiations is going nowhere. Now we have a deal signed and a breakthrough into this front. You got the vaccination is there into so many countries been administered on people, and the markets are hopeful the life is going to get back to what it was before the coronavirus. And we got the Fed 2 weeks ago talking about their outlook about the economy, and they are expecting growth in the GDP in the year 2021, and so many other forecasts are expecting the life to get back to normal. This kind of environment is not supportive for gold. So for the time being, and especially that we are heading into the year end, I would recommend that you don't take position in this market. Wait, maybe next week we'll have more clarity. That's all for this week. Thank you guys for watching. I'll see you next week in another video.